Let's be honest, the AI stock market has been a wild ride. Over the last couple of years, it's probably created more wealth and, let's face it, destroyed more than any tech trend since the dot-com boom. So the big question is, where do we possibly go from here, especially now that some of that initial hype is starting to fade? Well, that's exactly what we're going to break down.
And this is the question on every single investor's mind right now. But here's the thing. Thinking about the AI boom as just one single event, that's a huge mistake. It's not one big wave. It's a whole series of them. The first one is definitely crested, and now we have to learn how to surf what's coming next. The game hasn't just changed. We're playing on a completely new field. Okay, so to figure out where the smart money is headed, we've got to solve a puzzle that's tripping up even the pros. And it all starts with understanding how the fundamental question the market is asking has completely flipped. In this slide right here, it just captures that tectonic shift perfectly. The market has stopped rewarding dreams and has started demanding dollars. It's a massive change, moving from asking what if to demanding proof of what is. This brings us right to where we are today, in what our research calls phase 2. You can think of it like the market's hangover after that initial massive party. It's the reality check. And believe me, understanding this phase is absolutely critical if you want to make money from here on out. So let's just walk through this timeline really quick. Phase 1, that was the gold rush right after ChatGPT launched. It was pure, unfiltered hype. Right now, we are deep into phase 2, where every investor is looking at the balance sheets, scrutinizing every single dollar of revenue. In phase 3, well, that's what's coming next, the brutal, knockdown, drag-out fight for dominance. Your job as an investor is to figure out which companies are going to survive phase 2 and actually thrive in phase 3. So here is the most crucial takeaway. The days of just throwing a dart at any company with .ai in its name and hitting a bullseye, yeah, those are over. From now on, success is all about being a sniper, not a machine gunner. Okay, so how do we find those targets? To bring a little clarity to what is a very, very complex market, we can use a really simple but powerful mental model, mapping the entire AI market into 3 distinct layers. This 3-layer framework, infrastructure, platforms, and applications, this is going to be the map we use to navigate the whole ecosystem. Let's see how it all breaks down. This slide breaks it down perfectly. The infrastructure layer, that's the bedrock. We're talking the chips from companies like Nvidia and the massive cloud services from Microsoft and Amazon. Then you have the platform layer. This is where the core intelligence, the brains of the operation, are built, with players like OpenAI and Google DeepMind. And finally, you've got the application layer. This is where AI actually meets the real world, with companies like Salesforce and Adobe using those platforms to solve very specific business problems. And this, right here, this quote brilliantly illustrates the whole investment thesis for that infrastructure layer. Honestly, it's the cleanest way to bet on the overall growth of AI. It doesn't matter who builds the winning app, they will all be lining up to buy from the same handful of suppliers. But, and this is a big but, here's the billion-dollar problem. The market isn't stupid. It figured this out a long time ago, and that has created an absolute minefield of sky-high valuations and hidden risks for anyone trying to get in now. This number, it says it all. A stock like Nvidia is trading at over 30 times its future expected earnings. To put that into perspective for you, that's kind of like paying for a house today based on what you hope your salary will be in the year 2054. It is a huge, huge bet on a perfect, flawless future. And this gets right to the heart of the challenge. This is what's known in the business as being priced for perfection. What that means is, even fantastic news might not move the stock all that much, but any tiny hint of disappointment, it could send it tumbling down. And these risks, they are not trivial. I mean, will companies actually see a return on all this massive AI spending? That's the ROI problem. And you got to pay close attention to commoditization. Think about what happened with cloud storage. It used to be super expensive, now it's practically free. The same thing could happen to AI models, and that would absolutely crush the profits of the companies that build them. And that's before we even start talking about regulation or geopolitics. So with prices this high and risks this serious, how in the world do you play it? Well, you stop gambling and you start investing. And that, my friends, requires a plan. This slide gives us an excellent strategic checklist. First, don't put all your eggs in one basket. You gotta spread your bets across all 3 layers. Next, prioritize companies that can show you the money, the revenue from AI today. Then, keep your position sizes in check to manage that risk. And maybe most importantly, think long-term and stay humble, because nobody, and I mean nobody, knows exactly how this is all going to play out.
You know, this quote just perfectly captures the moment we're in. The phase of blindly buying any stock with AI in the name and winning is over. The next wave of AI millionaires won't be made by luck. They'll be made by discipline. And that leaves us with the ultimate question, the one that should guide every single investment decision you make from here on out. When you look past all the noise, all the hype, who will emerge as the true, lasting winners? I can tell you this much, the answer won't be found in today's headlines, but in tomorrow's profits.